Australian dollar has a negative week. Before we start, a quick word from our sponsor. This video is brought to you by XNest, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The Australian dollar has fallen during the week, perhaps in sympathy to the Reserve Bank of New Zealand cutting rates, and therefore subsequently sending the New Zealand dollar lower. After all, these two currencies do tend to move in the same overall direction, so it'll be interesting to see how that plays out. That being said, we have bounced a bit, and the candlestick, although negative, doesn't look horrific, and it does look like, at least in the time being, traders are doing everything they can to jump in and support this market. If the Australian dollar were to break above the 0.6850 level, then I think we have the possibility of a move above the 0.6950 level where we pulled back from over the last several weeks. In that environment, once we get above that level, then I think you've got a situation where the Australian dollar continues to go much higher. On the other hand, if we break down below the 0.6650 level, that could send the Australian dollar falling towards the 0.6450 level. As usual, you have to pay attention to commodities as they have a definite influence on the Aussie dollar. And for what it's worth, they are accelerating to the upside. So that might be a situation where the Australian dollar just grinds higher, maybe having nothing to do with interest rates or Australia itself, but maybe more to do with what we are seeing in other markets such as copper, gold, iron, etc. If you enjoyed the video, give me a thumbs up and subscribe.